Welcome back to ETF.com Live, the video edition. My name is Dave Nottig, Managing Director here at ETF.com. Another great question today. This one was, what's more important, expense ratio or tradability? And the short answer here is both. So let's dig into what we mean by that. So really, this is entirely dependent on your use case, how long you think you're going to be holding a particular ETF for. So imagine that you're trying to, say, get exposure to the large cap US market, and you're choosing between two funds, and one is 20 basis points and one is 10 basis points. Well, is the 10 basis point fund always better? Depends on how long you're going to hold it. So if you're going to hold this fund for, say, 10 years, well, over the course of that 10 years, that 10 basis point difference in expense ratio will in fact make a huge difference. I mean, I can't do the math off the top of my head, but it's going to be several percent in return that you're going to forego over that 10-year window, as that 10 basis points you're not getting compounds by being in the more expensive fund. So in that case, the cheaper fund's going to be really important. But let's imagine that you're really only doing this sort of as a speculative play, and you're planning on holding this fund for a couple of weeks. Well, now if there's any difference in the cost of trading those two ETFs, that's going to be much more important. ETFs tend to trade with spreads that range from extremely small, say a basis point, 0.01%, to sometimes 0.5% or more. A 0.5% spread is going to make a huge difference if you're planning on getting in and out of this position quite quickly, right? You'll book that 0.5% round trip, in a matter of weeks. Compound that over the course of a year, and it's sort of an implied trading cost of many percent a year. That's going to overwhelm any difference in the expense ratio. So whenever you're evaluating an ETF, whether it's for a speculative trade, whether it's for a long-term allocation, it's really important to understand what you're trying to get out of that investment. The longer your time horizon, the more expense matters, the less trading matters. The shorter your time horizon, the more trading costs matter, and the less the expense ratio matters. Hope that helps clear things up. See you next time.